Thank you, Morgan. RJ, thank you for joining us today from Palo Alto. You beat the expectations, a smaller than expected loss for the quarter. But let's be honest, your guidance is nothing to write home about. You're going to be spending more in terms of CapEx, and you're cutting your delivery guidance. It was 46 to 51,000 vehicles. Now you're saying it's going to be 40 to 46,000 vehicles. What's changed in just a month since you gave your last guidance?
Well, thanks, Phil. As you said, Q1 for us was important. It was our second consecutive quarter of having a positive gross margin, $260 million of positive gross margin, which is great. But as you said, there's a lot of uncertainty, and both in terms of our cost structure on CapEx, that's equipment we're buying. With the trade and tariff situation, we are reflecting more CapEx spend for the same content. And we're also looking at the overall consumer sentiment just more broadly in conjunction with what's happening around trade.
I want to talk about consumer sentiment. Are you telling me that basically people are saying, overall, I'm pulling back in terms of vehicle purchases or with electric vehicles? Because you know the narrative that was out there in the first quarter, as there was the backlash against Tesla, there were people saying, well, they're going to go over to Rivian. Mm-hmm. Has that not happened?
Yeah. Well, look, we have today on the consumer side, we have really just our flagship product, the R1S and the R1T. They are doing really well. The consumers love the product. It's the best-selling premium electric vehicle, over $70,000 in the entire United States, and it's the best-selling premium SUV, over $70,000, electric or non-electric, in California. So the product is doing well. The challenge is, as consumers start to be more price sensitive, it's only our flagship product. And so we really need our R2 product in the market. Starts at $45,000. It's incredible. I can't wait for it to be out. But if you see more price sensitivity on the buyer side, having that lower price product is going to be really important for us.
RJ, it's Morgan. Given that price sensitivity from consumers, what does that mean in terms of your ability to push on or push out price if you do see higher prices internally, higher costs internally amid trade and tariff dynamics?
Yeah, there's a lot of knobs we can turn. So we have our product mix. So if you do the math on our quarter, you'll see the average selling price for all of our vehicles, both our consumer-focused products, the R1 product line, and our EDV, is over $88,000. So we have a very high ASP, average selling price. But we have mix shift. We can we can build more of our largest battery pack, what we call our max pack. We can shift to different trim configurations. So that's one of the big knobs we're looking to turn. Of course, there's also vehicle financing offerings that are in place, and what we do in terms of leasing and in terms of overall vehicle financing. And those are the two big variables we have to play with. And what we're doing as a company, as leadership team, is we're very focused on profitability. And so when it comes to making a trade-off between volume and selling more units versus driving towards increased profitability, we're going to err on driving towards profitability, recognizing that the significant volume step up for us comes with R2.
And RJ, speaking of R2, you've had 2 consecutive quarters with gross profitability, significant because that was one of the gating benchmarks, if you will, that you had to cross in order to free up another $1 billion in financing from Volkswagen. Do you have the liquidity in place right now to get to the R2, which you have indicated is critical for you to address a more mass market?
Yeah, thanks for pointing that out, Phil. So this second consecutive quarter profitability does unlock another $1 billion coming in from Volkswagen. That supports an overall strong cash position that we have today, and allows us to launch R2 and to have the cash in place to ensure that not only through the launch but through the ramp up of that product, we're in a really healthy place.